So just a little more about who I am. I have worked with over 250 entrepreneurs. I forgot to put that in. Yeah. And small business owners on all types of transactions, from public offerings, which was in my investment banking days. I was in the small caps market, mergers, acquisitions, VC financing, family buyouts, employee buyouts, leverage buyouts. I've been there, done it all. So we will go through some of what some of that means. What I am going to ask is, I'm going to go through sort of a soup to nuts and then open it up for questions if people don't mind, because sometimes I answer some of the things that are coming up just by going through sort of the whole spectrum. So I've worked with obviously large corporations, everything from Kraft to Steelcase to Goldman Sachs, TELUS, Hydro, locally Van City. I love socially responsible businesses. I love environmental. I also have worked with tiny businesses, from canola production to GIS to like web-based booking systems. Expedia for Freight is one of my clients. That's not their name, but that's how they bill themselves. So, and I am a business owner myself. I've spent the last 30 years either on my own or with other corporations building systems. And I'm really big on philanthropy, which, I support Dress for Success, Forum for Women Entrepreneurs, Minerva, and I love anybody who helps others help themselves. So that's it on sort of the business side. And I'm also a single mom of a 13-year-old. And oh yeah. And I'm a West Coast swing dancer. Love West Coast swing. Anybody wants to learn more, ask me later. And what I thought today is, I really want to talk to the idea of exit strategies specifically for people who are passionate about their business. I think that's pretty much everybody I heard. Ambitious for growth. I like the idea about global dominance. That was cute. That want to create value but need to be rewarded appropriately. I think women often don't ask for reward and then don't get rewarded the way they should be. That are really smart, innovative. I mean, really interesting niches. I love your pitches, by the way. Very spot on. And who have innovative new ways to do things. So the question is, once we've done all this fabulous growing and wonderful things, then how do we exit? And I want to talk about exit on a couple of different levels, because you don't have to have a full exit from a business. Even a financing, even bringing in a partner, franchising, licensing, those are all exits. And they can all fit into the same template that I'm going to give you, the same system. You can use it for valuing joint ventures, affiliates, and of course IPOs, initial public offering, going public, venture capitalists, employee buy-in, management buyout, any of those kind of structures. So an exit is anywhere that you are taking part of your business and selling it, as opposed to selling your product. And that's really, really, really important. You're selling your business, not your product. It's probably the biggest area that people lose value in the process, is they get all excited about selling the product. And that's not what the transaction is about, or what the exit strategy is about. So if you want to exit someday for millions of dollars, or if you have just decided that, you might decide one day that you've just had it, you've put enough time in and you want to get out. Or, as I say, you want to bring in partners or franchisees, then this is a kind of system that you can use. Now, the interesting thing is that a lot of people, when they think about exits, they think, I'm tired already just thinking about exiting, because I don't have time, I don't have money, I don't have enough people anyway, because I'm doing everything. My sales are growing faster than I can handle, but I'm making less money. And I'm exhausted. And I have 4 kids. And in any case, I don't even know where to start. So today I'm going to not only give you the whole framework for it, but we're going to take you through the framework for starting, the first step that you need to take. You won't have a chance to actually fill it out because it takes some thought, but I'll give you the framework so you can take them with you. The other thing about the frameworks that I design for everything that I do in my work is I like to do them in very little steps so that they're fun, they're focused, and you get lots of immediate gratification that I got it done and I'm moving forward. So it's not like, you get some business planning packages and stuff, and they're these enormous, like 250 questions you need to answer to have a business plan kind of thing. And I really stay away from that stuff. I like to do it in small pieces. So, if as I say, I'm going to walk you through exactly how to do it. So, you have two options as far as I'm concerned for an exit strategy. Most people let it happen, and they sort of struggle through their business. They just kind of work away trying to make the business itself work, and they don't think too much about the end other than they want it to happen someday. And, often they're tired and overworked and everything lands on their desk and there's not enough money and everything else. And then they finally sort of come to somebody like me or a business broker or whoever and say, I want to get out, I'm done. Can you get me out like tomorrow would be good. And, obviously the value is often not there. It hasn't been built, hasn't been designed to sell. The other option is that you can actually create a business that sells. So if you know that you're going to get out of business at some time, and most of you should be sitting there going, yes, I know I'm going to be getting out of business at some time, you should create a business that you can get out of. Because an awful lot of people get sort of to the end of their business life, whatever that is, and it can be 3 years, it can be 10 years, it can be 30 years, and there's really nothing there to sell, or minimal amount to sell. So I'm all for the create a business you love, that's easy to run, so you can enjoy your life, whatever you like to do in life, sailing or golfing or dancing or climbing Kilimanjaro or whatever. And then with a view to selling your business for millions. And the reason I say millions specifically is because I find most small business people, $1 million isn't much anymore. And if you think about how much you take out every year from your business, at the end of the day, are you really taking enough out to retire for 30 years? Let's just say you're going to work to 65. You might live another 30 years. $1 million doesn't go very far over 30 years, unless you get taxed on it. So I want people to have this vision of, yeah, I'm going to exit for millions. This is not, well, maybe I'll sell it for $200,000 or something. What's the point of working for years and years and years and then really having nothing to sell at the end of the day? So I'm going to tell you the secret to creating the, what I called, well, I like having fun with names, I have to tell you. I like having fun with everything in finance. Mm-hmm. So I was asked to do exit strategies, and I thought, well, who wants to just do an exit strategy? You want a millionaire exit strategy, right? But then I thought, well, I don't just want to be a millionaire because that's kind of drab. So I've got the happy millionaire exit strategy. So I am going to tell you the secret to doing that. But first, I just want to tell you a couple of different ways that my clients have had their exits. Now, these are all older deals because there's no confidentiality issues now. Once deals are 20 or 25 years old, I'm not too worried about people kind of going back and figuring them out. But anything in the last decade, it's pretty easy to find out, who I've worked with and all that kind of stuff. So, one of the transactions, what they did is they had a core company. They were a canola producer, and they basically had agreements to acquire 2 other companies to take the larger company public. So all by themselves with the one production facility, they weren't big enough to go public. Nobody would have been interested in them, but with the agreement amongst the 3 producers, they were big enough to go public. So that's an exit strategy. They obviously still had to run the company afterwards, but they only ran it for a few years and they were purchased, or they were bought out by Cargill. So, and that was their strategy right from the beginning. So we structured them to go public very quickly as a group, and that was 4 months, $20 million. And that was a long time ago. It would be about 60 million now. So that's one thought if you're looking at exit, is joining with others and exiting. Another one was a GIS company. This is, again, back in the day when GIS was pretty much unheard of, which is Geographic Information Systems, where you have the map layering and that type of thing. And what we did with them is they didn't want to go public. They had no interest. They were all geophysicists. They had developed the technology accidentally. And so they were, what we did is got them venture capital, and we stayed away from the public markets, but we then positioned them for a strategic buyout. In other words, there was a company in the States in the same market. Their technology was not as strong, so they bought them, and after a couple of years of them having the venture capitalists in, and they, again, made millions. These are people who have exited for millions. Then we had another company that actually had a strategic investor, so a really large company in their space, put in private investment. Then they went public from there, and then they got taken private again. So there's all kinds, it's not as sort of straightforward as it sounds. There are a lot of strategies for combining different options. Obviously, as I say, employees can buy you out, family can buy you out. You know, you can buy other people and then sell. It's all kinds of options. So the secret to creating a business that you love, that's easy to run, where you have enough money and time to enjoy your family and friends and hobbies, is, are you ready? Yeah. You have to create an irresistible offer. So your irresistible offer is exactly what you're doing with your pitches, but now you do it about your company, not your product, right? So your investors don't want to buy your product. Well, they might want to buy your product, but that's not what you're buying in the transaction. So what is an irresistible offer to investors? Because it's not just an offer. Lots of companies have an offering. An irresistible offer for investors, first of all, is one that has real value. So it's not sort of, well, we plan to do this and we sort of have that, and oh yeah, we've done a whole bunch of this, but you know, they want to actually see it, right? They want to see that there's real value, the product's real, the market's real, you know, the competitors are out there and you know who they are. So they want to know that you know your business as well as your product. They want the offer to be clear. What are you offering? And you know, a lot of people can't answer that question. Is it shares? Is it common shares or preferred shares? Is it convertible debt? Are you selling your assets? Are you selling your intellectual property? Are you just getting a financing? If you're getting a financing, what kind of security are you offering? All those kind of things have to be thought about if you're going to have sort of an irresistible offer. And the reason for it will become clear in itself in a minute. You need to take investors step by step through your value proposition as a corporation. Not your product value, but your company's value. And you need to give your ideal investor exactly what they want. Don't waste your time. And I will tell you, I've seen people waste years, hundreds of hours. Christina, you've probably seen this too with companies trying to get financing, and they're going out to everybody and their dog, and they don't have a clear offering, and nobody knows really what they're selling. They're just kind of going around saying, well, you know, I kind of want financing, or maybe not, or maybe I want to sell, or I don't know. And they're talking to the wrong people, and it just it's a huge waste of time. So you want to give your ideal investor exactly what they want, and part of the reason for that is you're going to get a better deal. Because if you're hitting the buttons that they need pushed, if you're saying what they want to hear, they're going to be all over you, and they're going to do it really fast. I had this actually happen with a company in Vancouver. I'd forgotten about it until just now. And we were having a situation where so I was in investment banking, and we had the Canadian venture capitalists were kind of, hemming and hawing, and it seems like it's okay. We'll have to get someone in to look at the technology, and I don't know, and blah, blah, blah. We had a competitor who was in the industry. They brought their engineers up. In 1 week, they'd invested, and it was closed because they were exactly who should have been at the table. Everybody else was so far out. There was too much education. And it had been months and months and months. And this one company was just invested, out. So, in fact, they ended up buying it out a couple of years later, buying the whole thing. So, and how do you show the ideal investor that you have what they want? You need to have a track record, right? So you don't have just saying, well, obviously, if you are trying to get seed financing, so you're like really, really, really early stage, you can't show much of a track record. You can show what you've developed to date. And even then, a lot of companies don't put the documentation together in a way that is convincing. So, but as you move on, you've got financial statements, you've got, you should have customer, of course, testimonials, and you should have some sort of standing in the marketplace. And there should be, especially in today's electronic world, you should have a social media footprint, you should have, or some sort of footprint on your industry, and people should know who you are. You need to have some sort of a track record for credibility. And so why do you need an irresistible offer? Because, first of all, and this is really important, it makes it easy for the investors to write a check or transfer funds today. But you want to make it super easy for them to say yes, because there's a lot of reasons for them to say no. The quick answer is always no. You want to be in control. So this is about, if you have the irresistible offer, people are going to be hungry for your deal. You're going to be the one in control, and that's what you want. You want to be controlling the agreements. You want to be controlling the pricing. You really want to be the person in control. Saves you an enormous amount of time. Make sure you get the people you want, and you're not sort of at the mercy of whoever's out there, which is really important. And if you have an irresistible offer put together, and they're not that difficult to put together, at least conceptually, like in terms of a framework, you're ready to go whenever somebody shows up. And I can't tell you the number of times I've seen companies at a conference, a trade convention, some sort of speaking engagement, and some competitor or larger corporation comes up and says, wow, that's really interesting, and they've got nothing. They're not ready. They're sort of like, oh yeah, great, yeah, we'll talk to you someday. Instead of sort of saying, are you interested in getting into our space? Gee, we have, we're looking for blah, blah, blah. Even if you're not 100% ready, if you've got that irresistible offer together, you're ready to go. So I'm going to walk you through this first step and give you the irresistible offer worksheet. Maybe pass that down both sides. And I'm just going to walk you through. As I say, it does take some thinking, but I'm going to give you some guidance in terms of the thinking. And obviously, you can take that with you and fill it out. So, and I am going to, I do have people asking me at these events if they can get templates and that type of thing. So I do have just to keep it streamlined so that doesn't take a huge amount of time at the end, if you want to give me your name and email address and just check off if you want a template or whatever, I'll get that for you. Or if you have a question, just write it on. I'll get back to you afterwards. These things are really tight on time, so I like to try and streamline it. So, so you can see that I called it the Happy Millionaire Exit Strategy just to make me smile. I do things all the time that just kind of make me grin for my own reasons because I like to be amused. And I deal with numbers a lot, which don't make you grin very much. So the key is really, if you think about what is an ideal offer, you're really at the end of the process. Because you have to have done a whole bunch before you know what you're offering. And I will go through that whole framework in a few minutes. And so that's why I talk about starting at the end, right? So we're going to talk about just conceptually, again, very high level, what is your offer? So here's some of the parameters you should be thinking of. Are you selling some or all of your business? Like, start with the really big questions. You know, am I looking for financing or am I actually selling out, right? And am I selling out immediately or am I thinking I'm going to stay for a couple of years? Those big questions. What do I offer investors? Do I have high cash flow? Do I have high growth rate? Do I have unique technology? Do I have a market position that's unusual? Do I have intellectual property? Do I have exclusive territory? Do I have unusual profitability? What am I offering? And you can have any combination of those, and there may be other things like you may have a unique piece of property or a plant or equipment or a network even can be of value, positioning on the web. So what are you offering? Who are you? And the reason I have myself in the middle, my offer, myself, my investor, is that I'm talking about designing a business that you love, that you will sell later. Not one that you're going to struggle through and hate and, you know, cope with until you can sell it. The point, and I'm passionate about this, I believe that people should love what they're doing because you spend a heck of a lot of time doing it. So I could take any one of your businesses and make it ideal for any number of investors, and you would hate it. And you'd be like, really? I don't want to go into work today because I don't want to run a business like this. So the idea with this worksheet is we're really trying to pull together two worlds. What you love and what you want to do and what the investors will buy at the end of the day. Okay? So myself can be things like, if I was doing mine, literally, you know, I'm an expert in finance. I'm passionate about finance. I love the aha. I love it when clients go, oh, I get it. I like to solve puzzles. I like to make the complex simple. So if I was trying to orient my business so that everything was routine and I'm just doing the same thing over and over again, shoot me now, right? If I don't have complexity to simplify and puzzles to solve, I don't want to do it. So that's the kind of thing you need to be really honest with yourself about, right? What do you want to do all day? And then who's your investor? Who do you envision seeing your investor? Now, this is going to change over time. You should be pulling this out every once in a while and figuring it out. Is it the public or is it a seasoned, sophisticated investor? Is it a big investor or a small investor? Are there many of them or are there very few of them? And are they strategic, financial, or operational? That is, actually, I should have said that as number one. Does everybody understand the difference between a strategic investor, financial investor, and an operational investor? Okay. So strategic investor would be like Kodak wants to buy you because, oh no, they're bad, they're gone. Who am I saying? Pepsi wants to buy you because you have a restaurant chain or whatever. That's a strategic buyer because they're saying, okay, strategically this gets us moving forward. When I've worked on strategic deals, like Hydro was investing in alternative green energy companies. Not because they wanted to own a bunch of green energy companies, but they wanted to make sure that green energy was being funded in the province so that they would have supply down the road. So there are strategic investors. Quite often you'd be surprised who in your sector is strategically investing in different areas. Surprising number of corporations do strategic investing. Financial investors are what you're used to. VCs, leverage buyout firms, investment banks, merchant banks. And those guys, they're just looking at your cash flow, your profitability, and your growth projections. They actually really don't care what you do. A lot of times, they just care that you can keep doing what you've done and that they're paying the right price. And operational investors are people who want to run your business. That is what they want to do. Management buyouts, family businesses, employee buyouts, that type of thing, those are operational. And people often ask, well, who's going to give me the best value? Well, it really depends. I've seen high bids from all three of those areas in different, for the same company in different situations. So if your sector is in favor, sometimes the financial bidder will pay more than strategic. which is counterintuitive. When you think about it, you think, well, a strategic buyer is going to take my business and add it on to their own business and presumably get multipliers of benefit. But if the financial markets are running hot, as we say, and if they're like the dot-com boom, then nobody can beat what a financial investor can pay in a hot market. And then operational, sometimes it is worth more. Your employees sit there and go, yeah, it might take us 5 years to pay off. Whereas an external investor will say, I know I got to pay it in 3. But your employees are sort of buying themselves what they want to have for their future. And so they're very different valuations. And so there I'm also, I know this is going really quickly, and so I hope people are sort of thinking about their questions. But those are the types of things that also influence valuation. There is no one value. There's no formula for value. There's actually, when I was taking my Charter Business Valuators courses, at that time they said there was 21 definitions for value. Market value, fair value, those 3 are all different. Perceived value, liquidation value, net asset value, it goes on and on. So we'll talk a little bit more about that in a minute. And I mean, I'm sure we'll have questions on that is what I mean. Because I want to just run through this next framework, and then we'll be pretty close to the end. Now, this is not something, again, that you're going to be able to do in detail here in the session. But it gives you something to look at when you're on your own. And people are free to contact me if you have any questions. I'm more than happy, and I'm happy to respond to a group if a group has questions. Because this is really the crux of having that value in the future that allows you to get the exit you want. And as I say, that exit can be any format. It could be partial. It could be, you can use this same framework for franchising. You can use this framework for creating a joint venture, whatever, because the principles are the same. So the questions that Lisa had asked me when she asked me to speak is, I've answered them all here, and I will, and I'll just run through them really quickly. The first was, how do you prepare for an exit? And that's why I came up with a 5-step exit strategy for the happy millionaires. But the really important thing is to build a business that sells, right? So what's your blueprint? First of all, you need to get a hold of your found money. So a lot of businesses are stepping over money. They really are, a lot of money. It's not unusual for us to go into, us in the financial area, I mean, to go into a company and find cash flow, profitability, all kinds of money that's kind of sitting in different pockets that's being overlooked. And I am, and the reason I put in here that the found money framework is that I'm going to be publishing bits and pieces to that over time. It's something that I've found a lot of businesses would like information on, so it's going to be part of my blogging, that type of thing. Balance growth and risk. So you can have a really high growth company and by taking enormous risk, or you can have a low growth company and have low risk, and different investors are going to value those differently. And then I have my, shiny, how to stop distractions. So you really do need to be focused on what your end game is. And because it's really easy in a new business, you have so many opportunities and people love your product and you're running all over the place doing this and that and the other. But the fact is most businesses, you can't really exit before 3 to 5 years from the time you start designing an exit strategy. We shouldn't say you can't. You can, but you won't get best value. And just to give you some context, Facebook was 8 years till they went public. Now they went public for huge amounts of money. And Google was, 6 years. And those are all just exceptionally high growth stories, right? Much faster growth than what you have. She asked the question of what are our options for exiting? And I said, you obviously need to design your perfect exit, structuring your deal right up front. So what are some of the options for exit? Well, we've talked about IPOs and venture capitalists and that type of thing, but really it's around where do you create value, right? That's going to determine where you can exit. So how do you figure out what your business is worth? You need to look at the components of value, your profitability, your cash flow, your assets, and your growth and risk. Those are your 5 components of value. You need to know your investors. We talked a little bit about that. Know yourself. Making sure that you're taking care of yourself in the process. And then she asked, well, how do you price it? And I mean, each one of these topics could go on for days. So as I say, I'm just giving you a bit of an overview. You really want to create hunger for your deal. If you want to get top price, it's not, lots of textbooks will give you formulas. It's not a formula. I've had all kinds of clients get far more value than what it says in any valuation textbook about net present value of cash flows or whatever. You need to do what you need to do for your products. You need to build awareness. You need to connect to the investor community, whoever those ideal investors are that you've already identified, whether it's competitors, whether it's financial investors. You need to really stoke the fire. So you really want to get out there and win awards or put your name out there as the expert in your area or get the PR or do the social media. I mean, don't do everything, but whatever's relevant in your business to create that desire. They say, that's the company I want. And if you know what that ideal investor is, if you know what they want to hear, then you can be positioning all those pieces, right, in terms of what's going to lead them to action, which is my last point on here. So the fact is value is subjective. It's completely subjective. And all the finance textbooks will tell you it isn't, but it is. It varies over time, sometimes day by day or minute by minute. Ask anybody who trades stocks. And a business is worth different amounts to different people, right? So creating value around your business it's the same challenge as creating value around your product or service. The next question was, well, when? What's the best timing? And I said, well, there's 3 secrets to selling your business: timing, timing, and timing. And that is literally economic timing. Is the economy in the right cycle? If you have an internet business and the .com boom has just busted, I don't care how good you are, you're not going to get investment. If you're in mining and Bre-X has just gone down, you're not going to get investment, right? So you got to watch the economy and you got to watch your industry. And you really want to watch for when you're in the hot sector. And every sector has its time. And that's when you will get the most money, the most interest, and get your transaction done fastest, which is why you want your irresistible offer ready. Because if you start seeing consolidation in your industry, and I was talking to engineering firms a few years ago about this, when all that money was going into infrastructure, I said, you guys, if you're looking to retire, because a lot of engineers are in their late 50s, early 60s, if you're looking to retire, do it now, because it's hot. And when the infrastructure funding is gone, you're going to be scrambling for crumbs. And some people did, and some people didn't. And they're really, really suffering now. And then the last was, how do you do it? Get your deal done right now. So you need to find your ideal investors. And some of these, by the way, are talking points, so if people want to ask questions on it afterwards, that's why I've got them on here. How to get it done. Obviously, give your investors what they want. Opening the kimono, what to show them and when. You eventually have to show your investors everything, whether you like it or not. And a lot of business owners hate that. I know it's very uncomfortable, but there's a lot you don't want to show them early on. And you need to know, when you're going to show them whatever you're going to show them. And negotiations, pulling the yes out of no. Obviously if an investor isn't a good fit, just walk. But sometimes you have investors who like everything but, right? So that's the no, whatever is the but. And you really want to be looking for, where can I find the yes in there? What is it that, is it going to contort me into something that is killing me, is, take too much time and energy? Or is this something that I can actually solve pretty easily? Can I change the structure? Can I change the price? Can I change, what can I do to pull that yes out of no? And then it isn't over until it's over, closing the deal. I have had deals fail because they were going public on September 12th, 2001. I have had deals fail because they were the day after Bre-X, the day after the dot-com bubble, the whatever listed, or that it was going to close. So really don't go spend your money before the check's in the bank. Now I had said, just on a final point, I know because I've taken a lot of time here, there's a lot to think about with all this kind of thing, and I said to Lisa that I don't like to leave anybody behind on this, so I do put aside hours every year to do mentoring for FWE, and what I've done is I've put aside some time for strategy sessions. If you want to talk about, this is not consulting, by the way, this is literally what's my best next step if I want to look at having an exit strategy. I've put time aside that I can do one of those sessions with each person in the series. Well, I'm assuming not everybody will take it. If they do, oh well, my bad. I'm also offering you, I do a series called Women Leading Change, and this time I'm using women's intuition to analyze financials. And it is at the Met Hotel, and it's a lovely luncheon that they put on, and I decided that as part of my donation to FWE, I'm offering it to you for free, even though the Metropolitan charges me $75 for it. So, but I like to encourage people to come and access financial education. It's not as scary as you think. And anybody who sets up a strategy session too, so the one bonus is the luncheon, and the second bonus is the first 6 people get a free hour of consultation. So there you go. So encouraging people to really come forward, because this isn't, as I say, I'm not selling anything here. I want women to get more comfortable with the whole area of finance, with this whole concept of I have an end game and I'm not just sort of drifting along in business. Like, this is about, well, sign it quick and be one of the first 6 here. And so I think one very last thing, I printed up this is before I decided on the Happy Millionaire. Sorry, it's not quite as funny. But anyway, I put together some cards for you for your takeaways. Just to remind you, put it on your fridge, put it over your computer, put it somewhere that, I should be looking at my future, what's that look like, and what are some of my considerations.